everybody. Thanks for joining today. As Mark said, I'm Shweta. I'm an internet analyst at Evercore ISI. As part of my job, for those of you who are not aware of what we do, we analyze internet companies, and that includes online dating apps, but it includes a whole vast universe of companies, including e-commerce like Amazon and Etsy and Peloton, or subscription-based businesses like the dating companies, or mobility companies like Uber and Lyft, or advertising companies like Google and Facebook. So that's the universe of companies that we look at as fundamental analysts. We study the fundamentals of the business, understand what the management strategy is, try and think of really do a deep dive on the consumer side of it, where the demand is coming from, and at the same time study the business fundamentals from the public filings as well as the industry checks that we typically do to come up with an opinion of our own on the stock. So in this example, it would be for publicly traded companies like Match and Bumble. What is it? What is our fundamental opinion on the stock, whether these shares are buy or a sell or a hold based on our research. And so that's what we do in a nutshell. Our clients are really the institutional investors who are hedge funds and mutual funds. So that's my world, and that's part of the most recent research that we did is what I'm wanting to share. So I hope you enjoy it. Before I move on to the first slide, just at a high level, when it comes to online dating, the way we think about the category as a whole, and then also about Match and Bumble as public companies, is across 5 different parameters. And so for those executives over here who are CEOs or founders of dating companies that are private and are hoping to bring it public, hopefully this is helpful to you from that lens. But the 5 key things that we think about at a high level are: how big is the category as a whole? So what is the market opportunity here in the US and then globally? And that is an important thing that we study, because that allows us to think of how fast the category can grow in general in terms of sales growth. The second thing that we think about is, when it comes to individual companies, how good of and differentiated of a value proposition do these companies offer? So in Match's case, how is Match different from a Bumble or a Grindr or any host of other dating apps that may not even be public? And some of you are aware of a lot of these. So what is the differentiated value proposition that gives them a competitive moat in order for them to sort of sustain healthy growth rates and market share? The third thing that we look at is product differentiation. That is, why is Tinder's product better or worse than a Hinge or a Bumble or a Grindr? And what is it that each of these products offers that is so unique that the consumers are going to stick to it, or perhaps not stick to it and then jump off? That's the third thing. The fourth thing that we look at is the business model itself. That is, how attractive of a business model this company really offers in terms of profitability, in terms of free cash flow, in terms of margins, in terms of top line growth. All different fundamental metrics that really help us understand the health of the business. And then finally, we also think about the quality of the management team. How good of a quality, and that is a difficult thing to do, just because initially you don't have that much experience knowing the management team unless they have been around for a long time. But that's the depth of the leadership team, the experience of the leadership team, the execution while they have been public, are all part of our analyses. So, having said all that, let me move on to the first slide. This is the first factor that I was talking about, which is how big is the market opportunity. So based on our research, we think that the dating category is about $7 billion market opportunity right now globally, if you include US, Europe, LATAM, and APAC, excluding China. We think that the category as a whole is expected to grow in high single to low double-digit growth rate CAGR over the next 5 years. So between now and 2028, we expect the category as a whole to become an $11 billion category, growing at around 9% CAGR. That CAGR could be anywhere from 8 to 10%. This is our in-house analysis. So what really drives this growth are 4 things. One is online penetration. Not everybody still uses online apps to find a date. And in US and Western Europe, that penetration level is anywhere from 45 to 50%. But that's not true when we think about LATAM or when we think about APAC. The online penetration of dating apps itself is underpenetrated. So as more people use dating apps, that itself is a growth driver. The second driver is the growth of single population. So divorce rates, people who are entering, adulthood from 18 onwards, people who are entering college. So that cohort of population of single folks who may be looking for a date, that growth is kind of correlated with just general population growth depending on the geography that we're talking about. The third driver is really revenue per pair. That is, how much are you paying per app? To subscribe to Tinder, it's somewhere between $15 and $20, but to subscribe to Hinge, it's $30. So is there pricing power, and how fast can that grow over time across different geographies? It may not cost $30 in India per month to subscribe to Bumble. It's not affordable. And so thinking about that. And then the final one is just the payer penetration. What that means is this is a freemium model where anybody can use a Bumble or a Hinge app without paying anything. But in order to get all the bells and whistles, you'd have to be a payer, a subscriber, or pay for a feature. What is that conversion looking like? What percentage of people who are free users actually convert to pay for it? So these are all the drivers that go into our analysis to come up with the $7 billion market opportunity that we think will grow at around 9% on an annualized basis over the next 5 years to get to an 11 billion market. Is that big? Yes, that is a big market. And it, quite frankly, given the size and scale of Match itself, that creates, Match in itself has a 30 to 40% market share because of Tinder and Hinge and the cumulative value of all the assets that they own. And so the combination of Match and Bumble, the two public companies in online dating, if we don't include Grindr alone, accounts for a significant portion of the $7 billion market. And so the question becomes, what's the opportunity for the long tail online dating category, and where else can the category grow beyond just dating? Are there other features that can expand the market opportunity? So those are some of the things that we think about when it comes to TAM, or the total market opportunity for the category. Moving on to the next slide. This is a busy slide, but the gist of it is the second driver, which is the product and the value proposition. Essentially, at a high level, when we look at it, this just covers Tinder, Bumble, and Hinge. All three of them have different subscription tiers. On the left-hand side, you see, Tinder has Plus, Gold, and Platinum. Bumble has Bumble Boost and Premium. All three of them offer different subscription tiers. All three of them offer unique features, from Bumble Boost to, super swipes to super likes, all that. And the question a lot of times that we ask is, how differentiated is the product itself? How differentiated is the user experience? And so when we look at all three products and other products that are not part of these public companies, a lot of times we find that the use case ultimately is very, very similar. The features are very, very similar. So it's almost like comparing a TikTok video experience to a Snapchat video experience to an Instagram Reels experience. When we think about social media as a category, so in online dating as a category, how we think about the user experiences is very comparable. Super likes is very similar to super likes that Bumble may offer versus Tinder may offer. Then the question becomes, what is the differentiated value proposition that's beyond the features that each of these different apps offers? And one of the things that Bumble differentiates itself is on women make the first move. That's their ethos. And that is a mode that they are sticking with across geographies in order to expand. And the value proposition that they are offering there is safety for women. And a lot of our research shows that vast majority of payers on these dating apps are actually men. And a lot of times it is men who initiate it within this category for a potential date. And so the Bumble's ethos and value proposition that differentiates itself is that women make the first move. Now, there are features like compliments that allow men to send a message on a one-time basis, but at a high level, that's their differentiated value proposition. Now, when we think about Hinge, what is so different about Hinge? It is really that it is more intentional. And their value proposition is that it takes more time for single folks to fill out all the unique things that they are looking for and about themselves in order for Hinge to make a better, more educated matching pair for the daters. And that's because the users are more intentional on Hinge. The demographic is slightly different than the users on Tinder. So at a high level, yes, there could be some cannibalization that goes on, but fundamentally the question is beyond the features that each of the apps offers, how deep is the value proposition and how deep is their moat that will resonate for a long period of time to give them a sustainable advantage. Moving forward, this is again a slide that is comparing different price points across the three different subscription tiers. So there's Tinder, there's Hinge, and then there's Bumble. And as we can see, just at a high level, Tinder, and a lot of you may already know, Tinder obviously is the cheapest plan, even after accounting for their most recent price increase, followed by Bumble and Hinge. And part of the reason is because of the target market that Tinder has. Tinder offers a very easy entry point for daters, and historically it has been for casual and serious relationships. And as a result, there have users who are single and are maybe looking for friendship as well as serious dating are on the app, and that's fundamentally different from users on Hinge or even users on eHarmony who are actually on the older side, and that's why they can afford to pay a little bit more because they are more serious about where they want to be dating. So that's something that we think about when we are comparing prices, not only who is cheapest and who is most expensive, but really which app has pricing power. Can they afford to raise prices again and still hold on to the pairs that they have and also drive new payer growth? That's the question that we ask across different geographies as we think about different apps that are wanting to expand into new markets. We also did this is a slide from a recent survey that we did. One of the key things that a lot of investors are wondering about is Gen Z, and if the user experience is changing and their preferences are changing as well. And so we tried to find out by asking questions to single folks who are actively looking for a relationship across different age groups. And what we found is you can see on the leftmost bar that really for Gen Z cohort, social media and TikTok has become one of the most popular ways of finding a relationship. Almost 60% of people said that they use social media to connect with somebody else, whether it is for a date or a casual friendship. And that was an outlier. When we asked older folks, it was half and half. About half of them said they use online dating apps, and half of them said they use, meetups in bars, etc. Now, does that mean it's negative for online dating apps because this survey shows that Gen Z prefer social apps over even dating apps? I don't think so. And the reason is because dating apps is all they do. They have built a business and a technology to drive high quality matching algorithms for people who are actively looking for dates. And that's not the focus for social media companies. And that unless they invest heavily to focus on offering a dating app that's unique and is directly competitive to the existing dating apps, I don't think that it is a huge negative, at least not yet in our view, because our survey also shows that people use multiple channels. There's no one unique way that wins everything. They could be using dating apps, they could be using social apps, they could be using even referrals in order to meet the person that they want. And dating apps is a fast and easy way to most efficiently optimize for the best match that you could have based on your preferences and your personality. Similarly, we asked people like why they choose dating apps and what is it that allows them to choose a certain app over other. And for Tinder, it was really because the app is well designed and it is good and it offers good and useful features. For Bumble, it was by far it is because the app is well designed. And for Hinge, it was between high quality matches because of it is a high intent app, and the app is well designed. The bottom line of this all is that the importance of user experience and how well the app is designed is paramount, because you are not going to hold on to the user, A, if the quality of matches are not good, and B, if the user experience is terrible. And that just the survey result just highlights the importance of product and user experience when it comes to consumer internet companies, including dating, whether it's social media or something else. And then this is just a quick data point on average, single folks pay for two apps, dating apps, but use maybe three dating apps. That's on average at any given point in time. And the average life of a pair is anywhere between 6 to 9 months. And then this is our final slide, and then I'll spin it back to Mark. But what we tried to study was new features that could potentially drive growth for dating companies based on what has worked in some of the international geographies, based on recently launched features. And one of them is compliments for Bumble, which allows men to send a message to a woman on a one-time basis for a price. And our data shows that it is pretty well received across both genders, men as well as women. And we've been doing this for a couple years, and majority, that is 60% of folks, actually view this feature favorably. And then on the right-hand side, it's virtual goods. There has been a huge uptick of the adoption of virtual goods in Asian markets. And so Bumble and Match are both trying to enter the Western European and American markets with virtual goods as a feature. And what we found is that there is a pretty good propensity to adopt virtual goods here. And while it doesn't show on the chart on the right, we also found that Gen Z responded the best on virtual goods in terms of being able to use virtual goods in an online dating forum. And that's it. So I hope this was helpful. We basically, again, to wrap it up, we look at the market opportunity, we look at value proposition, we study the products, we study the pricing power, we study business models, and we study management teams to come up with our own opinion on these types of companies. And that's it. Back to you, Mark.
Oh, that's strange. Why did it do that? This camera's not tracking properly. All right. Thank you very much, Shweta. That's great. That's a very rich overview. And I've got a few questions for you. So we'll do questions for about 5 minutes or so, and hopefully we can do a couple of questions here. So I'm just going to go down the list based on upvotes. So folks, if you haven't voted yet on a question, now's a good time to do so. I'm going to pick the first one from Brad Jones from Meat King. What is your take on niche market players? Match, Bumble, Hinge, are very mainstream players trying to appeal to as broad a market as possible. I'm in the sex positive space, which these players avoid. Is there a parallel to the IPO of Grindr?
That's a great question. Ultimately, for long tail businesses, we view them as long tail apps just because the fundamental question is, how big is the market? So the mainstream apps have become big partly because the market is big, partly because adoption of those types of apps is easier because it represents vast majority of consumer choice. And so for niche players, the biggest, and that includes Grindr as well, the biggest question is, how big is the market? If you take your offering, how many people in the US, how many people in in Europe or anywhere else globally will actually want to adopt it, and then after adopting it want to pay for it? And when you think about how much they want to pay for it, what is it on a monthly basis will they actually want to pay for it? So that's really the fundamental question for niche players in terms of the size of the market. Now, for the entire dating category, we think it's $7 to $11 billion market. My guess, without really doing any research on niche, any particular niche within dating, my guess is that it is a much smaller market size, given the use case, unless there are other add-on features and other value proposition items that you can add on to make it into a mass market. Now, the other, as a final thought, as a founder of a company that wants to grow and would like to continue to see top line growth as well as profitably to grow the business, an exit strategy could be to be bought by a bigger business. Now, it may not be Match, it may not be Bumble, but it could be something else. And that's a perfectly good strategy as well, to see if there are complementary aspects to it.
And we've seen acquisitions of groups of companies. It's kind of attractive to have a niche network. Case in point, the Match bought the People Meet group.
Yeah.
Black People Meet, for example, that came from that acquisition years ago. Yeah, so that's and of course there was Cupid. There was a network of kind of diaspora and multiracial dating sites that was acquired for $51 million recently. So the strength is in numbers. Don't just be one niche, have a network of niches, and then it becomes an acquirable asset. So the second question, thank you, Brad. Second question is from Shalini Singh from And We Met. How big is the serious dating market versus casual dating? Roughly. Any ideas on that? That's difficult to distinguish, actually.
That is extremely hard to know. I actually don't have an answer for that. I would be guessing. So unfortunately, our surveys do not suggest that.
And where do you draw the line? You know, at the end of the day.
It's hard to know where we would draw the line either. It's a great question. I'm sorry, I'm not being useful on this one.
No, that's a toughie. That's a real toughie. I remember looking at this. In fact, Raina and I did an analysis of Hitwise, a list of like 1,000 dating companies years ago, and we divvied it up in terms of niche and kind of generic and casual, etc. And we hit upon a question. We look at eHarmony, and we looked at eHarmony and thought, what do we do with eHarmony? Is it a niche or is it mainstream? And I came to the conclusion, we're talking like 10 years ago here, came to the conclusion the day eHarmony is considered a niche is the day that we probably shouldn't be working in this industry. You know, like run the full gamut. It was like, at the end of the day, if it's good, people stick around. So I've got Brad Jones, Meet King says, did you look at Facebook dating at all? Yeah, it seems like an abandoned product line. Any thoughts on that?
It is. Long time ago, Facebook introduced a feature that would allow dating, but and at that time it created a lot of noise against Match. Bumble wasn't in the picture, and it's the best analogy I can think of is Amazon with Homemade and a competitor of Etsy. So that's the analogy, and the conclusion is that unless Facebook actually goes all in, I mean, their bread and butter is digital advertising business. So they're not going to do anything that's going to jeopardize that piece of it. But if Facebook decides to actually invest and go all in to build an algorithm, build that technology that allows better matching than anyone else, including Tinder and Bumble, then it would be a real threat. But we did not sense that they went that route. They actually shuttered that when they first introduced it, and we are not hearing much else. Now, the real threat actually will be if TikTok comes up with something, because they have such a great Gen Z attention pool that if they invest in a matching algorithm, then that could be a real threat.
Yeah, food for thought. And Facebook's been malingering with Facebook dating for some years now. They seem to have a love-hate relationship with the dating industry. They actually shut the entire industry down for some time when they learned that people were not so welcoming of dating ads in their Facebook stream. They got the lowest ratings, and they just killed most of the industry and whitelisted Match, eHarmony, a few good quality players at the time. So it's been quite an interesting relationship with Facebook. I wonder if we've got time for one more, maybe one more. Peter Christopher, Christian Filipina. Thank you, Peter. We've got Match seems to have emerged unharmed from accusations and litigation by the authorities of fraudulent business practices. Do you think there's risk from this litigation that could return?
Do I see a reason to? From my understanding,
Yes.
no. Could I be wrong? Absolutely. But the litigation risk actually is against Apple that could work in their favor on the Apple fees. on matches fraudulent practices, I've not heard much. I mean, I'm not a lawyer, so that I don't know, but I've not heard much on that.
Gotcha. All right. I think that's all we have time for. We should move along. Thank you very much, Shweta. We appreciate your time.
Thanks, Mark.
Thank you so much for being here. We'd love to have you back at some point in the future. When you've got any updates, or we'd love to have you back. Thank you.
Sounds good. Have a good one, everyone. Thanks, Mark.